Modi invoked the lawlessness that prevailed in 1990s under RJD. He said that the progress of the state during Jangal Raj was zero. Why has Congress not been able to crack? Why are they irrelevant in Bihar? What happened to the vote chori camp? What happened to the SIR camp? Are we looking at a close election victory or the margins are going to increase?
Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
This is India's #1 news network, and you're watching News 9. English news as it should be.
Very good morning. You're watching News 9. I'm Karthik Malhotra, and it's a big news day. And here are all the stories that we will be talking about on the show this morning. First up, the FTA seems to be flavor of the season. Minister Piyush Goyal says that India-Eurasian Economic Union free trade agreement talks will commence from today. We'll tell you all about that on the show this morning. Also on the show, India's GDP is expected to grow as much as 7% in this financial year. We'll tell you what the numbers say. Also on the show, Cars24 CEO Vikram Chopra calls out the government's lack of political courage to tackle the toxic air quality in Delhi-NCR. And of course, the stock market seemed to have a green open this morning, taking cues from Wall Street as well as its Asian peers. Avinash Gorakshakar will be here to talk us about the market sentiment. You're watching this edition of Morning Brief at 9. That's right, you're tuned in to Morning Brief at 9 this Wednesday morning. Here are all the headlines that you're tracking. India to completely halt purchase of Russian crude oil from December, sources tell news agency Reuters. India-Eurasian Economic Union free trade agreement talks to commence from today, says Commerce and Industry Minister Piyush Goyal. India's economy to grow 7% this fiscal, says India Ratings and Research Indra. Economists polled by Reuters say the Q2 growth for India likely to stand at 7.3%, but also gives some disclaimers. Meanwhile, gold prices continue to rise after a brief relief. Silver shines even brighter. The much-awaited Tata Sierra 2025 edition launched at just under 11.5 lakh rupees ex-showroom. We'll tell you what Tata Motors MD Shailesh Chandra has to say about Tata Sierra and the SUV portfolio at Tata Motors. Staying with the auto sector, Cars24 CEO Vikram Chopra calls out lack of political courage in dealing with Delhi's pollution, says uncomfortable decisions need to tackle toxic air. Meanwhile, air quality in Delhi-NCR continues to deteriorate despite the passing of Ethiopian volcanic ash. In corporate news, Reliance JioMart fined for selling banned walkie-talkie sets online. And expect a green star to the stock market in India as investors take global cues from Wall Street and Asian peers. A top story this morning, India's import of Russian crude expected to fall sharply in the month of December, reaching its lowest level in nearly 3 years. Refining and trade sources tell Reuters that buyers are scaling back to avoid violating tightening Western sanctions after volumes surged again in November. Meanwhile, Reliance Industries had confirmed last week that it had stopped purchasing oil from the two sanctioned Russian firms Rosneft and Lukoil ahead of the US sanctions and after honoring its contracts with the two oil companies. More details in this report.
India's Russian oil imports are set to hit their lowest level in at least 3 years in December. That's according to trade and refining sources. It would be down from multi-month highs seen in November. The sources said it's due to refiners turning to alternatives to avoid breaching Western sanctions. Britain, the EU and US have tightened sanctions on Moscow over the war in Ukraine. Washington's latest measures targeted top Russian producers Rosneft and Lukoil. Buyers of Russian oil had until November the 21st to wind down dealings with the two firms. Separately, the EU has set a January the 21st deadline, after which it will decline fuel from refineries that handled Russian crude within 60 days of the bill landing. One source said that bank scrutiny following the latest US sanctions has made Indian state refiners extremely cautious, adding that India is likely to get 600,000 to 650,000 barrels per day of Russian oil in December. Most Indian refiners have stopped buying Russian oil. India is also under pressure to buy more US energy after Washington doubled tariffs on Indian imports to 50%, citing New Delhi's buying of Russian oil.
And staying with stories around trade between India and Russia. Well, the India and the Russia-led EA-EU group will start formal negotiations for a trade agreement from today. India and the five-nation grouping called the Eurasian Economic Union or EA-EU had on August 20th inked the terms of reference for the agreement. Now, the terms of reference outline an 18-month work plan aimed at diversifying markets for Indian businesses, including MSMEs, farmers, as well as fishermen. Now, Russia, Armenia, Belarus, Kazakhstan and Kyrgyzstan are the 5 member countries of the EA-EU bloc. Now, this development is important as India is looking to diversify its export markets due to high tariffs imposed by the United States. Russia is the top trading partner of India in that bloc, with bilateral trade worth $68.72 billion in the year 2024-25, with exports worth under $5 billion and imports almost close to $64 billion from Russia. But remember, the high import numbers are due to a jump in crude oil imports. But this data is last financial year's data. Now, the bilateral trade with Armenia, Belarus, Kazakhstan and Kyrgyzstan was much lower at just $830 million or so cumulatively between those 4 countries. Now, on the commencement of the FTA talks with Canada, Commerce and Industry Minister Piyush Goyal said there is serious interest on both sides in the agreement. He said that soon both India and Canada will meet to kickstart the process. In a free trade agreement, 2 countries either eliminate or significantly reduce import duties on the maximum number of goods traded between them. And staying on stories about India's GDP, well, India Ratings and Research or INDRA on Tuesday raised India's GDP growth projection for the current fiscal year to 7%, and this coming on the back of high growth in the June quarter and less impact of the US tariff hike on global growth and trade. Now, Indra expects GDP in FY26 to grow 7% year on year. That's 70 basis points higher than its earlier July forecast of 6.3%. Now, the RBI, meanwhile, has projected India's GDP growth in the current fiscal year at 6.8%, better than the 6.5% expansion in the last financial year. Now, India's real GDP grew at the fastest pace in 5 quarters at 7.8% in the April to June quarter 1 of this financial year. The official data for Q2 is scheduled to be released on Friday, November 28th. Now, major headwinds for India include the uncertain global scenario due to the US unilateral tariff hikes for all countries, with tariffs on India being among the highest at 50% announced in the end of August this year. But there are tailwinds too, and the tailwinds for the Indian economy since the July forecast are the faster than expected decline in inflation, increasing the real wage rate, especially in rural areas. And of course, another tailwind happens to be the GST rate rationalization. The ratings agency expects private final consumption expenditure to grow 7.4% year-on-year in FY26. That's 20 basis points higher than last year. And this would be driven again by GST rationalization as well as lower inflation. Now, Indian exports to the United States fell almost 12% and almost 9% year-on-year in the months of September and October this year, respectively. Now, while exports averaged $7.2 billion per month in the last financial year, FY25, they've averaged $7.4 billion from the April to October 2025 period, but dropped to a little under $6 billion during the September to October period this year. Meanwhile, as per a Reuters poll, India grew 7.3% in the July to September quarter, and this was underpinned by strong rural and government expenditure, even as private final spending remained subdued. Now, government spending, a key driver of growth in recent years, also likely persisted in Q2 of this fiscal year. Remember, India remains one of the world's fastest growing major economies, even in the face of US President Donald Trump raising tariffs on Indian exports to 50% in August, a move that has contributed to foreign investors pulling out nearly $16 billion from Indian equities so far this year. Meanwhile, household consumption, which accounts for roughly 60% of the economy, strengthened in the previous quarter, Q1, as rural spending improved on better agricultural output, urban demand and private investment, while private capex investment continued to lag, suggesting, as per Reuters economists polled, uneven growth in Asia's third largest economy. Now, economists polled by Reuters are more cautious on the medium-term outlook, predicting GDP growth to slow down to 6.8% this quarter and 6.3% in the quarter ending March 2026. Now, a low deflator, which falls when inflation cools, also provided a boost to the latest data as it did in the previous quarter. This is what several economists told Reuters. Wholesale prices inflation was negligible and consumer inflation was on average around 2% between the months of July and September. Inflation has since fallen to about 0.25%. And gold prices climbed as much as 3,500 rupees to just shy of 1,29,000 rupees per 10 grams in the national capital on Tuesday, amid fresh buying at local jewelers and retailers for the wedding festivities, according to the All India Sarafa Association. Now, snapping its 3-day losing streak, the precious metal of 99.5% purity appreciated by 3,500 rupees to 1,28,300 rupees per 10 grams, inclusive of taxes. It's not just gold that is rallying. Silver prices also witnessed buying interest in tandem with gold. The white metal soared by as much as 5,800 rupees to 1,60,800 rupees per kilogram. Now, traders said demand from local jeweler businesses has picked up for the wedding season. There are global factors too. A weak US dollar against major currencies also boosts the demand for safe haven assets. In the overseas market, gold spot rate was trading at 0.09% lower at USD $4,131 per ounce in New York, while spot silver fell 40.4% at $51.15 per ounce. And moving to stories now from corporate India, let's begin first with Tata Motors, which has made its foray into mid-sized SUV segment, which is currently dominated by the likes of Hyundai Creta, Kia Seltos and Maruti Suzuki's Grand Vitara. by bringing back the popular, much-awaited brand of yesteryears, the Tata Sierra, in a brand new avatar with introductory prices starting at just under 11.5 lakh rupees. Available in 3 engine options, 2 in petrol and 1 in diesel. Now, the electric version of the Tata Sierra will be launched in the next financial year. Now, Tata Motors passenger vehicle expects contribution of SUVs to its overall sales to go beyond 70%, with it making a foray into the fast-growing mid-size segment with a premium positioning of the Sierra model. This according to the Managing Director and CEO Shailesh Chandra. As per industry level, the percentage of SUVs to overall passenger vehicles is likely to stabilize between 55% to 60% with GST 2.0 helping non-SUV segments grow. But it remains to be seen if the growth momentum going forward can be maintained and how many new models are launched in those segments. Remember, in October this year, the Tata Motors overall retail sales were at 75,350 odd units, up about 13.5% from almost 67,000 units sold in the same month last year as per FADA data. Now, post GST 2.0, the compact SUV segment and subcompact SUV segment grew in volume. On top of that, with Tata Sierra's estimated strong debut, the company is looking at enhancing its reach to 80% of the passenger vehicles market, up from the 55% currently. Now, while bringing back the Sierra, the MD of Tata Motors said that the company had to reimagine it in order to make it relevant not only to Gen X that have the nostalgia value, but also to the Gen Y and Gen Z audience. Bookings of the Tata Sierra started yesterday and, bookings of the Tata Sierra will begin from December 16th and deliveries will start on Jan 15th, 2026. And staying with the world of automobiles, Mahindra & Mahindra says it plans to set up 250 electric vehicle charging stations, each with a 180 kilowatt battery charging unit by the end of 2027. The network will entail 1,000 charging points across 250 stations, aligning with the government's priority of strengthening public EV charging infrastructure to accelerate EV adoption in India. This as per the Mumbai-based automaker. Now, the company has already inaugurated the first 2 charge-in stations in Hoskote on NH75, that's the Bengaluru-Chennai highway, as well as Murthal on NH44, that's about 50 kilometers away from Delhi. Mahindra & Mahindra says its XEV 9E and the BE6 electric vehicles with their 500 kilometer real-world range take care of range anxiety issues among drivers. Now, the charge-in stations will be strategically positioned along major highway corridors. Each station will be co-located with wayside amenities such as restaurants, cafes, making them natural halting points for travelers. And staying with leaders from the auto sector, but pivoting from core automobiles to the pollution woes in Delhi-NCR. Well, when the founder of a company that sells cars says Delhi must cut down car usage, you know the crisis has crossed every limit. Cars24 CEO Vikram Chopra has warned that Delhi's air has become unbreathable and only strict, uncomfortable measures can save the city. In a powerful post on X, Chopra wrote, and I quote him, "I run an auto tech company. My entire business depends on people using cars. And even I'm saying Delhi needs far stricter rules to fix the air," unquote. Now, his message was deeply personal. He wrote that he has a 5-year-old son and 80-year-old parents, and their lungs cannot survive excuses. Calling Delhi's pollution a man-made disaster fueled by public intolerance for discomfort, Chopra reminded citizens of what worked in the past and what was abandoned because it felt inconvenient. The 2020 lockdown slashed pollution by nearly 60%. Now, Grab restrictions brought immediate improvement, but every time, he said, people mocked it, halted it, hated it, and shut it down because inconvenience was louder than data. Vikram Chopra blamed policymakers for lacking political courage to enforce proven solutions. Congestion pricing, diesel curbs, construction site monitoring and tough action on stubble burning. But his harshest criticism was for society itself. I quote him again, "We want clean air, but not at the cost of traffic rules or personal convenience. That mindset is the real pollutant," unquote. That's what he wrote in his post on X. Vikram Chopra urged the government to act like Delhi is in a health emergency, restrict cars, curb diesel in winter, enforce construction bans, and crack down on chronic polluters with urgency. Now, his final warning was chilling. And I quote him again, "If we don't accept inconvenience now, we'll be living inside an air purifier-shaped coffin in 10 years and pretending it's progress," unquote. And well, the air pollution problem is not limited to Delhi-NCR alone. India's air pollution crisis is deeper and more widespread than many realize. A new satellite-based study conducted by CREA shows a staggering 60% of Indian districts exceeded the national air quality safety limit for both PM 2.5 and PM 10 pollution. Not a single district meets the World Health Organization's far stricter guidelines. The data reveals a clear north-south divide. Northern and eastern states like Delhi, Punjab, Haryana, Uttar Pradesh, Bihar and Assam suffer the highest pollution, with amongst all their districts breathing dangerously toxic air all year round. In contrast, southern and coastal states such as Tamil Nadu, Kerala, Karnataka and Telangana generally have cleaner air but still fall short of global safety limits. Delhi stands out as the most polluted state, with annual PM 2.5 level reaching about 101 micrograms per cubic meter. That's 2.5 times the Indian limit and 20 times the WHO guidelines. Now, this makes Delhi's residents some of the most exposed to hazardous air pollution across the country. Now, seasonally, winter sees the worst air quality, with about 82% of districts crossing safe limits due to colder weather and emissions. While the monsoon brings some relief by cleaning the air, pollution levels bounce back sharply due to continued emissions and activities like stubble burning. The study underscores that pollution doesn't respect borders, especially across the Indo-Gangetic plains and emerging northeastern hotspots like Assam and Tripura. Air quality management must therefore shift from a city-centric approach to a comprehensive district and airshed level strategy, using satellite data for better tackling and accountability. Now, to turn the tide, India must extend pollution control plans beyond major cities, target key emission sources like industry, transport and biomass burning simultaneously, and foster coordinated actions among neighboring states. And time for a short break right now, but coming up on the other side, Avinash Gorakshakar will be here to talk to us about the market's mood this morning. It seems to be a positive start for Sensex and Nifty. We'll get you all that and more on the other side of the break. You're watching Morning Brief at 9.
ये बेस्ट है सर।
हमेशा वाला क्यों नहीं?
मिश्रा जी, आपके लिए फूलों की बरसात, बिरला ओपस एश्योरेंस देने के लिए।
मतलब प्रोडक्ट वारंटी?
ये एक्स्ट्रा है। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे।
वापस करके देंगे?
वो भी फ्री। पेंटिंग में पहली बार बिरला ओपस एश्योरेंस। रजिस्टर करो birlaopus.com पर।
back. You're watching News 9. This is Morning Brief at 9. Let's bring you all the action from the Lal Street. And it seems that investors are in a better mood than yesterday. In fact, better mood than the last 3 trading sessions on the Lal Street this morning. And positive cues coming in from global markets, which is lifting the sentiment on Sensex and Nifty. Let's pull up the charts and see what the data tells us. Even though we see a green start to the stock markets this morning, both Sensex and Nifty up about more than a quarter of a percentage point in trade in first few minutes of trading this morning. It's not still reaching those critical levels which would give investors a little more confidence in a bullish run. As things stand, just 5 minutes into market open, Nifty 50 is trading just a little short of that psychological 26,000 levels, while Sensex, the 30 stock index, is about 150 points behind the 85,000 odd levels. Similar momentum coming in from the small cap and the mid cap space. Remember, there have been some concerns about valuations in this sector, but similar investor momentum seen even in the small cap and mid cap space this morning. While volatility in the Indian market has declined about 2% or so, right now standing, the India-Eaeu standing below the 12 mark. Let's pull up the Nifty 50 heat map and try and see which are the sectors which are adding to this positive momentum. And it seems that the IT sector is doing well this morning. You've got Infosys as well as HCL Tech up about half a percentage point, while the reaction seems pretty mixed on TCS and Wipro, while in the green, just marginally, more or less flat as per the closing standards yesterday. The news from the BFSI sector is also a little encouraging this morning. ICICI Bank is up about 0.6% or so. Meanwhile, Jio Financial Services is up more than 1%. The stocks on the energy front are also in a good mood this morning. Reliance Industries is up about 0.7%. Meanwhile, Coal India up more than 1% or so in trade. The only drag that seems to be holding the Sensex and the Nifty 50 from touching those psychological levels this morning seems to be Bharti Airtel. That stock is down more than 2% or so in trade this morning. Avinash Gorakshakar is here to help us understand the mood of investors on the Lal Street this morning, as well as the foreign investors which seem to be escaping India and preferring Asian peers as compared to Indian equities at the moment. Avinash, good morning. Pleasure having you back here with us on News 9. Help us decode what you see on the charts this morning. First up, let's begin with why investors seem to be a little more positive on rest of Asia rather than India. Is it just US tariffs and no trade deal yet, 50% tariffs, or is there something more to it?
Yeah, good morning, Karthik. I think my sense is, the markets suffered a lot of, volatility yesterday because of the derivative expiry.
Yeah.
And today morning markets have opened positive largely because yesterday US markets were up quite significantly. I think now there are strong indications of a rate cut expected very soon, and I think that definitely is a very big booster shot in the near term. See, in India, I think clearly the trade deal and the FII flows are two, data points which have not yet, gone positively with the Indian markets. But I think, probably by the end of this month or early next month, we could see some kind of solution on the trade deal. But I think what the Indian market is suffering clearly on the domestic side is, a large amount of liquidity is coming from primary market supply of paper. And I think this is going to continue. We have been hearing now reports that, companies like Misho, companies like most of the larger kind of mainboard companies are expected to make a bigger splash in the month of December. So I think net, that puts a lot of pressure on the secondary market. One good positive part is that, quarterly numbers, the Q2 numbers have come out much better than what the street expected. And I think we have seen sectors like cement, auto components, hospitals, hospitality doing pretty well. Even FMCG has shown some uptick, but I think the real, uptick and the real growth could possibly be visible in Q3 ending December. And I think that could be a near-term trigger point, from the first or second week of January. So we are pretty hopeful that the market would consolidate. In fact, today, you could see a good bounce on the Nifty, considering the buoyancy we saw in the Dow last night. But I think we need to see that follow-up action coming up in the second half of the session today. So we are keeping our fingers crossed. But Karthik, I think more than the index, I think it is a broader market which I think investors should now focus on.
All right. And what are the levels that you're tracking on the Nifty 50 to really be able to tell us with some degree of certainty that we are in a sort of recovery phase and we are in the so-called bull run? Would 26,200 be a good level that you would be tracking today?
Yeah, I think, see, basically 26,200 is just a number, Karthik, but my sense is that as long as the index retains 25,800 or 850 odd levels, I think we are very well positioned. See, I think the clear point is that the index will definitely, cross 26,200 convincingly. But I think for that, you need a big sentimental booster like a trade deal or typically some sort of, easing of supply from the primary market paper, and obviously a very strong corporate earnings growth for December. So probably, markets may not cross 26,200 immediately. They may hover around that level for some time. But I think post December numbers, maybe the second or third week of January, the market should also start discounting the pre-budget expectation, which this time my sense is we could expect a very big positive surprise. A lot of action could now happen in the winter session. I've been hearing reports that the government is likely to push many important bills, and that also is going to be a clear trigger point for the markets going forward.
All right. And talk to us about what markets are pricing is as far as Q2 GDP growth data, which is expected to be announced on Friday. What are markets pricing in? Because economists polled by various news agencies as well as independent analysis show that India is likely to see a robust number on its Q2 GDP growth print as well. So next week, is there likely to be better momentum on markets, keeping aside all other geopolitical issues related to the trade deal with the US?
No, I think GDP numbers could be attractive. I think I've been reading numbers that the number could be anywhere between 6.5 to 6.6%. And I think clearly, what kind of commentary comes after that is also equally important. But I think the number should be pretty robust. And I think that should definitely, give a very good sentimentally boost up factor to the markets.
All right. And the immediate next sort of domestic event that investors would be eyeing would be the RBI's MPC in December. Likelihood of, since inflation has been very, very low and overall the government would want the capex investment cycle to kick in. I think the view on the street would be that RBI would go ahead and make that 25 basis point cut. If that were to happen, good news awaited for the BFSI sector?
Yeah, definitely. In fact, Karthik, a recent interview of RBI governor has clearly said that he's in favor of rate cuts going forward. And I think, with the retail inflation number, which was released recently, showing a very record low, that clearly shows that there is some area and some scope for a rate cut going ahead. So I think the market should definitely cheer this, although some part of it has already been, discounted in the markets. My sense, even a 25 basis point cut comes, it should be beneficial for the NBFCs, for the banks, for the housing finance companies. And that definitely is a boost up factor for the market, because whenever interest rates cuts are done, I think that's a big boost up to the earnings growth for most of the companies.
All right. I also want to spend a minute understanding from you the block deal of 7,100 crore rupees for Airtel by Indian Continent Investment. What does this mean for investors already invested in Airtel? Because the stock is slipping about 2%, in fact, more than 2% or so in trade right now, Bharti Airtel.
No, I think, Karthik, these kind of block deals are not going to upset the long-term growth trajectory of Bharti Airtel. I think, these things happen with every block deal. Today, you may find the stock a little bit under pressure, but once by the end of the day, we come to know who are the new buyers and which are the institutions which have taken this stock, I think you'll probably see a little bit of corrective action, maybe not today, but tomorrow. My sense is that the company should do exceedingly well in the second half, considering the fact that now ARPUs have stabilized, the 5G rollout has happened. And I think Bharti is a very strong now player in the telecom market. So I think net, nothing to worry in the short term. I think longer term, I think the growth trajectory for Bharti Airtel will continue.
All right. I also want to talk about auto stocks because you had mentioned, Avinash, at the start of our conversation that you're more bullish on Q3 numbers than potentially Q2 numbers, and the earnings of Q3 is something which could pretty much define the mood of the market for the medium term or so. I want to talk about the auto sector specifically because auto sector has obviously seen a massive fillip with the GST rate cut. And then yesterday, of course, we saw the launch of Tata Sierra and Tata Motors stock this morning. The passenger vehicle stock is up about 2.6% or so. So while competition intensifies in the auto space, great numbers likely to come out in Q3. What is your medium to long-term view for investors who would want to potentially invest in auto stocks?
So I think clearly the passenger car sector and the then the utility vehicle sector, and of course even the two-wheeler sectors are definitely going to show a very strong positive volume growth. If you look at two-wheeler companies, we have been very positive on stocks like Hero Motor. I think volume numbers have increased significantly. Plus they have a very large rural India base, so that puts them in a much better position. As far as the utility vehicle market is concerned, we continue to like M&M. Even at these levels, our sense is that not only is the company a market leader in UVs, the tractor market is also now shaping up very well. The electric vehicle product portfolio has been also doing well. So I think M&M should also positively surprise the markets, because in terms of their balance sheet, capital allocation, and the kind of positioning they have done, I think M&M definitely also suits. As far as Tata Motors is concerned, I think they had a cyber attack in JLR, and that affected their passenger car business. But I think clearly, if you look at the next 1 or 2 quarters, Tata Motors also has come down to reasonably attractive levels. So I think somebody who's got a slightly higher risk appetite and a slightly higher time frame can even think of nibbling into Tata Motors. Our sense is over the next 12 to 15 months, you could see a good outperformance in all the automobile stocks.
All right, and closely linked to the auto sector is also the energy sector. The demand for fuel, which is never likely to ebb out despite the sort of penetration of EV. So I'm looking at the energy stocks this morning, and great momentum seen. Reliance is up about half a percentage point. Coal India, BPCL, HPCL, all up more than 1% or so in trade. Now, what seems to be the trigger here? Is it the fact that that we have in any case decided not to go ahead and buy any more Russian crude, or is there something else? Is it just demand supply?
So I think, Karthik, there have been some reports that very soon Russia-Ukraine war could end, and that could possibly put a lot of supply of oil in the market already. And I think most of the oil marketing companies, their profitability is dependent on crude oil prices. So I think my sense is that stocks like BPCL, HPCL, IOC could benefit, because if crude prices come off, and I think even if they don't buy from Russia, the overall crude prices soften, that is definitely going to improve their GRM. So I think instead of the upstream companies, we are more positive on the downstream oil marketing companies. And I think IOC, HPCL could definitely fit the bill. We really don't know whether this news is genuine or not. But yesterday there were strong reports that Ukraine and Russia have decided to end the war very soon. And if that happens, that's going to definitely mean that the oil market is going to be very, very comfortable. And that itself is going to be a near-term trigger for these oil marketing companies.
All right, Avinash Karakshakar, we leave it at that. Thank you so much for your time this morning. Meanwhile, Nifty 50 has crossed that psychological 26,000 levels this morning. Let's see how much of an upside is left, especially as Avinash mentioned in the second half of the trading day. But for now, Avinash, thank you so much for your time. And moving on now, JioMart, the retail major from Reliance, has found itself under the scrutiny of the Central Consumer Protection Authority. The regulator found that JioMart, in violation of its directives, is selling walkie-talkies on its platform without disclosing licensing requirements or in compliance with wireless spectrum norms. Now, CCPA has imposed a 1 lakh rupee fine on Reliance Retail Limited's e-commerce platform JioMart for this violation. I have my colleague Amit Ranjan joining me this morning to help us make sense of this story. Amit, good morning. Help us understand, first up, what are these ETA and CCPA guidelines that Reliance Retail has allegedly violated?
Good morning, Karthik. Yeah. Devices outside a given bandwidth, that is 446 and 446.2 megahertz, require a regulatory license. Now, CCPA found that 58 walkie-talkies that were sold on the JioMart platform, one, did not mention the frequency that these devices carried. Two, did not mention whether a license is required for these devices. And three, whether a license has been obtained by the platform so they can be freely sold. So this misled consumers into believing that these devices can be used without a license, and that is where JioMart has been found at fault.
Been a reply to CCPA from Reliance Retail on these charges?
Yes. So Reliance has contended that they have contended that the responsibility lies with the seller, and they are just an intermediary platform. To which, and some of the investigated caches that were found were cached Google pages that were not active anymore.
Okay.
After the first reply that CCPA had sent to them. Some of these pages had been frozen by Reliance.
All right.
To which the CCPA has replied that the responsibility totally lies with the platform and they cannot mislead consumers, and all the information that is required has to be on the platform so that the consumers are not misled.
All right. And walkie-talkie seems to be an aberration. Are there other such items that the CCPA has banned or restricted for online retail platforms to sell?
There are three categories that I found. One is walkie-talkies outside the said bandwidth. The second one is alarm stopper devices for car seat belts. Those devices that prevent alarms from going off if your seat belt is not on.
All right.
Those devices are banned. And three, dark patterns are banned, which basically can entice or cajole consumers on websites to purchase more than they actually should. So these three categories are what are banned by the CCPA.
All right, Amit, let's leave it at that. Of course, we will be following this story for you. But thank you so much for your time this morning. And we will slip into another short break. But before that, the other global stories that we're following for you this Wednesday morning. US President Donald Trump says Special Envoy Steve Witkoff will meet Russian President Vladimir Putin next week as Washington races to lock in a deal to end the war in Ukraine. Meanwhile, Ukraine's President Volodymyr Zelensky accuses Russia of deadly cross-border attacks even as global efforts intensify to negotiate a ceasefire. US stocks rebound alongside Europe as investors bet the Federal Reserve is nearing its first rate cut in months. US government data shows spending momentum fading while firms face rising costs, adding to concerns about affordability in the US economy. And bad news for foreign visitors to iconic American sites like the Grand Canyon and Yellowstone. Trump administration announces hefty entry fees under a new federal rule. A first-of-its-kind partnership between AI platform Suno and Warner Music aims to compensate musicians as AI-generated music rapidly goes mainstream. And yet another American tech company, HP, announces 10% global layoffs as it shifts toward artificial intelligence to improve long-term efficiency. Britain prepares a high-stakes fiscal plan, all set to be announced today to curb debt and stabilize public services while claiming jittery markets. And Taiwanese President Lia Ching-te unveils $40 billion defense plan, says spending proposal is essential to counter China's growing threats. These stories on the other side of the break. You're watching Morning Brief at 9.
यही मौका है बिजनेस को बढ़ाने का, पर पैसा।
अपनी सुपर पावर यूज करने का टाइम आ गया है।
आप टेंशन मत लीजिए, IIFL फाइनेंस से झटपट गोल्ड लोन लीजिए और बिजनेस आगे बढ़ाइए।
आपके जैसे सुपर हीरोज ऐसी छोटी मोटी प्रॉब्लम से थोड़ी ना रुकते हैं, इसीलिए लाइफ जब भी आगे बढ़ने का मौका दे तो अपनी सुपर पावर, अपना गोल्ड यूज करिए और IIFL फाइनेंस से गोल्ड लोन लीजिए। IIFL फाइनेंस करता है सीधी बात।
Eastern India's first Business and Economy Literature Fest 2025 on 20th and 21st December at Taj Tal Kutir, Kolkata. EIILM Kolkata presents a Business and Economy Literature Fest 2025. Curation and ideation partner Story Nest.
Welcome back. You're watching News 9. This is Morning Brief at 9. Time now to pivot to global stories. Let's begin with global efforts to end Russia's war in Ukraine. US President Donald Trump said on Tuesday that his special envoy Steve Witkoff will travel to Moscow next week to meet Russian President Vladimir Putin as Washington pushes to seal a deal to end the war in Ukraine. Trump posted on his Truth Social platform that there were only a few remaining points of disagreement, but European leaders were skeptical and Russian missiles continued to rain down on Ukraine. He also expressed hope to meet soon with Putin as well as Ukrainian President Volodymyr Zelensky, but only when the deal to end the war is final or in its final stages. Now, earlier speaking to reporters at a Thanksgiving ceremony, Trump said his administration is actually very close to a Ukraine-Russia peace deal. Listen in.
I've also ended 8 wars in 9 months, and we're working on that final war. It's not easy, but I don't know. I think we're going to get there. 25,000 soldiers, Ukraine, Russia. In the last month, 25,000 soldiers have died. So I think we're getting very close to a deal. We'll find out. I thought that one would have been gone quicker. We did 8. I thought that would have been an easier one, but I think we're making progress.
And Ukrainian President Volodymyr Zelensky says Kyiv is prepared to move forward with a US-backed framework to end the war with Russia and is ready to discuss unresolved issues directly with President Donald Trump. Now, negotiators from both sides have been working to bridge differences over Trump's peace plan. Now, this plan, which Ukraine fears could pressure them into conceding territory to Moscow.
Now we have a good result from Geneva and from the meetings and talks that took place there. Ukraine has the framework developed by our teams in Geneva. That framework is on the table, and we are ready to move forward together with the United States of America, with personal engagement of President Trump, and with Europe, with leaders, and with all partners who have their strengths and capacity to help. And I'm ready to meet with President Trump, and there are sensitive points to discuss. We have them still. We firmly believe security decisions about Ukraine must include Ukraine. That was our position in Geneva. And always security decisions about Europe must include Europe. And the same applies to Canada, Japan, Australia, New Zealand, other countries, and every nation.
Meanwhile, Russia is signaling its own red lines. Foreign Minister Sergei Lavrov said Moscow expects any revised Ukraine peace proposal to reflect what he calls the spirit and letter of understandings reached between President Vladimir Putin and US President Donald Trump at their Alaska summit earlier this year. Lavrov said Russia had initially welcomed the first draft of Washington's framework and is now waiting for an updated version, one that takes into account consultations between the US, Ukraine, as well as European partners.
The key aspects of Trump's plan are based on understandings reached in Anchorage at the Russia-US summit in August this year. These principles are largely reflected in the plan, which we welcomed. Those who represent diplomacy and politics in Europe do exactly the opposite. The aim of those leaks, constant speculations, spreading rumors, is only one. In this case, the aim is to undermine Donald Trump's incentive in the part which reflects understandings reached in Anchorage. They do not even try to conceal this.
And on to corporate news from America. Alphabet-owned Waymo has taken a major step forward in driverless transport in the United States. On Wednesday, the company launched paid robotaxi operations on freeways across Los Angeles, San Francisco, and Phoenix, marking it the first time its autonomous taxis are operating commercially at high speeds. Now, Waymo is also widening coverage to San Jose, including services to Mineta San Jose International Airport, its second airport deployment after Phoenix. To meet stricter highway safety requirements, the company says it has built new high-speed safety protocols with local traffic agencies, and its vehicles now run with multiple backup systems to retain control if any core component fails. And new car sales in Europe picked up pace in October, rising nearly 5%, with electric vehicles leading growth, according to new data from the European Automobile Manufacturers Association. Volkswagen and Stellantis both saw modest gains, while Renault posted double-digit growth. But the picture was mixed for global EV makers, as Tesla sales fell nearly 50% year-on-year, while China's BYD surged more than 200%.
New car sales in Europe rose 4.9% in October as electric cars outpaced petrol and diesel registrations. Data from the European Automobile Manufacturers Association showed on Tuesday that sales in the EU, Britain and the European Free Trade Association rose to over 1 million cars. Its largest markets, including Germany and Britain, added more new cars than last year. The European car industry has taken a series of hits this year. They include Donald Trump's trade tariffs, a slowdown in the Chinese market, and a slower than expected transition to electric vehicles. There have also been recent worries about a potential chip supply chain crisis surrounding Dutch chipmaker Nexperia. Registrations at Volkswagen and Stellantis rose year-on-year by 6.5% and 4.6% respectively, while Renault went up more than a tenth. Tesla sales, meanwhile, dropped by almost half from a year ago, while BYD's sales jumped a near 207%. And while electric and hybrids saw a boost, all major markets saw drops in their petrol and diesel registrations.
And from automobiles to space mobiles, well, China successfully launched its first emergency response spacecraft into orbit on Tuesday, aimed at improving safety and resilience at its crude space station after a recent in-orbit damage incident. The rapid launch capability marks a new phase in China's fast-advancing space program. Take a look.
China's first emergency space launch reached orbit Tuesday after damage to a space station vessel earlier this month. According to China Manned Space Agency, the unmanned Shenzhou 22 blasted off from northwest China at 12:11 p.m. local time. The spacecraft will travel to China's permanently inhabited Tiangong space station, where astronauts currently have no craft that could bring them back in the event of an emergency. Earlier this month, the attached Shenzhou 20 spacecraft, which was meant to return 3 astronauts to Earth, was deemed unsafe to use. It has suffered a cracked window, probably caused by an impact from space debris. Now, the Shenzhou 22 will give the stranded astronauts a way home. It's also carrying spare parts to repair the damaged Shenzhou 20, as well as fresh fruit and vegetables for the crew. The CMSA said the spacecraft will remain docked at the space station until around April 2026.
And it's Wednesday, and it's time now for the Tech Weekly. From Nvidia CEO pushing back against fears of an AI investment bubble to Microsoft marking a major milestone for Windows. Here are the big tech stories that made headlines this week. Take a look.
From Nvidia pushing back on worries about an AI bubble to Microsoft's big anniversary, this is Tech Weekly. There is no AI bubble, but rather a tipping point. That was the word from Nvidia CEO Jensen Huang. He believes the computing his company specializes in will come to be part of everything from writing code to running legions of robots. Huang spoke after the chip giant beat expectations once again with stronger profit and sales. But a growing number of market skeptics, including the Big Short's Michael Burry, are concerned the only way off a tipping point is down. Foxconn caught the eye when it presented its new Model A electric vehicle in Taiwan. Chairman Young Liu said it was designed by Japanese engineers and the car will eventually be made in the country too. He also announced a partnership with OpenAI to design and build artificial intelligence hardware. Court filings alleged Meta shut down internal research into the mental effects of using Facebook. That after finding casual evidence its products harmed users' mental health. Meta documents obtained through discovery showed the company's research project involved the firm's scientists working with survey firm Nielsen to study the effects of deactivating Facebook. Internal documents showed people who stopped using the site for a week reported lower feelings of depression and anxiety. A Meta spokesperson said the study was stopped because its methodology was flawed. The filing was made by a law firm suing Meta and other tech giants on behalf of school districts around the US. Waymo's new Zeekr robo-taxi model was seen at a charging station in California. It was out for testing before the driverless service starts its expansion into San Diego next year. The new Zeekr model was developed with Chinese automaker Geely. Companies like Waymo and Tesla are investing billions into self-driving technology. And Microsoft's famous Windows operating system hit 40 years old. The first version was released under Microsoft co-founder Bill Gates on November 20th, 1985. Experts believe it eventually helped set the world standard for computing. The system is now on its 11th iteration, known as Windows 11.
And with that, we come to an end of this edition of Morning Brief at 9. Thank you so much for tuning in. But news continues on the other side of the break, so stay tuned to News 9.
What is speed? Do you ever see it? Or is it something you feel? Speed, it's relative. The more you speed up, the more the world slows down. And when you are fast enough, everything becomes still. That's when you see the world